Well, I guess there's three ways to look at that. One, I don't regard gold as an investment or a speculation, personally. I regard it as insurance. I own it as a 70-year-old man to sleep nights and stay calm. And I value sleep and tranquility. I invest in producing gold mining companies where they are competitive in terms of the net present value of the free cash flow which they could distribute to me over 10 years with other industries. This is separate and apart from an insurance function, because in this circumstance, I'm investing in the probability of free cash flows in the future. I speculate, and let's go back to the investment part. In that circumstance, I look, among other things, at market beta. I believe that the gold mining sector will perform competitively against other sectors for the next 10 years, because I believe it's more likely than not that the gold price will go up. And gold mining companies, if you measure them by the value metric of the net present value of future cash flows from on-balance sheet reserves and resources at current commodity prices, if you compare that net present value calculation with their enterprise value, their market capitalization plus debt minus cash, what you'll see is that as an investment class, what I describe as the best 12 miners in the world, the universe of the best 12 gold miners, are at the cheapest level that I have seen them in my entire career. So I think they're reasonable investments if I'm right about the gold price. There isn't much certainty in the investing world, I'm afraid. I speculate, I always make fun of speculators, and it's ironic that I made all the money that I invest carefully now by speculation. I speculate in circumstances where I think my knowledge around the process of exploration, construction, and development exceeds the knowledge of most of my competitors. I look for situations, where there is a possibility or even a probability that there is some increase in value that is unrecognized by the market within one or more companies. I do all three of those. The fact that the gold mining industry is attracting almost no competition from other investors who are smarter and more well-heeled than I is something that I'm absolutely delighted by. What I have learned is that when I am in a sector and I'm very lonely, my probability of doing well is higher. Mr. Buffett says buy straw hats in winter. And with regards to interest in the gold mining sector, we are certainly in the winter, which means because of supply and demand, it is more likely that they're cheap than they're dear. I also have learned that the speculative part of the investment business is extremely, extremely competitive. I compete with younger people who are able to work harder than I, although they might not have my experience. And what I've found is in circumstances where very few people show up to compete with me, I can usually outcompete them. I joke that an old, bald, fat 70-year-old like me can win the 100-meter dash if he's the only guy that shows up to run. And I'm seeing precisely that in the gold mining industry. Despite the fact that I think it's fairly fertile terrain, there aren't very many people settled here, which I love. I think the strength of the US dollar in the last 15 years hasn't been so much the strength of the dollar, but relatively the weakness of the competitors. As Doug Casey again says, the prettiest mare in the slaughterhouse. Unfortunately, we've done a superb job of debasing the franchise. And the consequence of the superb job that the United States has done debasing the American franchise is, I think, the reason that you're seeing the proliferation of gold and other investment categories in the central banks of various countries around the world, particularly those who feel threatened by us.
Central banks bought 400 tons in Q3 last year. These are numbers that we haven't seen since the 80s. Obviously, there's theories that Russia and China are the big buyers here. What are your thoughts on the continuous buying of gold by central banks?
Well, personally, I think it's a bad thing. in the sense that I'm anti-government. And so any government that does anything that's smart, that's advantageous, I think is a bad thing, because I'd like to see them all perish in penury. But moving on beyond personal prejudice, I think that we've left them no choice, we meaning the United States. If we sell them a US 10-year treasury, we pay them 340 basis points in a currency that we acknowledge we're debasing at 700 basis points a year. In other words, we guarantee the Chinese and the Russians a loss in purchasing power. We absolutely, positively guarantee that they will be able to buy less stuff with their savings than would otherwise be the case. Now, for once in their lives, they believe us, and for good reason. They also don't trust each other. When you look at these central banks, if they are unwilling to hold US treasuries, why on earth would they hold Russian treasuries? Why would they hold Argentine treasuries after 8 defaults in 100 years? We have left them no choice but to buy gold. The third thing, of course, is that foreign central banks have come to understand that various currency blocks are competing to weaponize their currency. While they may or may not be able to transact in US dollars, depending on the whim of the US government, they can always transact in gold. So I think it's fair to say that there's a decrease in trust around the world. Gold has always done well when there's a decrease in trust. It's a financial asset that isn't simultaneously a liability. It isn't a promise to pay, like a bond. It's payment in and of itself. And I think the increasing appetite for gold among central banks is simply a reflection of the changing economic times that all of us are living in. I think in the longer term, it's a big deal. I think in the very near term, there is no currency or block of currencies in the world that is as liquid and as transparent as the US dollar. I remember many years ago when it was suggested that the euro might replace the US dollar. And I remember very well my friend Doug Casey saying the dollar is an I owe you nothing. The euro is a who owes you nothing. Imagine a basket of currencies that is promulgated by one fairly strong economy, which is to say China, and a coalition of basket cases. Imagine a common currency that includes such fiscal stalwarts as Argentina and South Africa. This is a true non-starter. Now, the United States needs to be very cautious of further debasement of the US currency. I would suggest to you, Cassandra, that the enemy of the US dollar is not China, it's not Russia, it's not Saudi Arabia, it's not Iran, it's the US Congress. The idea that you debase the debt instruments of the US dollar, which is to say the financial products, by artificially low interest rates and by poor credit quality, and then you further debase the currency by weaponizing the SWIFT banking system and by weaponizing transactions in US dollars, using the dollar to export US values and US political power over other countries. This is insanity. It's true insanity. The United States enjoys what de Gaulle called the exorbitant privilege of being able to have the world's currency, stimulating demand in other countries, artificial demand for US dollars, because their debt and their trade were denominated in dollars. This is, in fact, an exorbitant privilege. Every American benefits, to the detriment of people all around the rest of the world, this privilege, which is the US dollar as a reserve currency. And the US Congress and the US executive is doing their very best for near-term political purposes to deprive American citizens of this exorbitant privilege. Truly insane. I think we'll see a more multipolar world. I think, too, that you will see bilateral trade in currencies other than the US dollar, particularly the Chinese yuan. But the yuan is a currency that is the reflection of an extremely insular economy. there is no transparency into Chinese capital markets, and there's only limited convertibility.